Good morning, everyone. Hope you're all doing well. You're doing better than me. I'm feeling a little sick today, unfortunately, but it is Tuesday, September 10th. Let's see what's going on here. We got some news. We're seeing kind of uncertainty, a little more volatility in the market, swings up, swings down, trying to gather some kind of bullish momentum from last Friday's lows. Haven't necessarily traded back into the Friday highs yet, but some of the buy side is starting to pick back up, and that's one thing that we'll discuss a little later on. But we'll talk about some of the news, right? Goldman Sachs coming into the news, warning about a troubling third quarter after witnessing a pretty strong rebound in the first half of the year. The investment bank sees trading revenue headed down for a 10% decline due to difficult fixed income conditions and the year over year comparisons, while it's also preparing to take a 400 million pre tax hit related to its costly exit from the consumer arena. Before embarking on a turnaround, Goldman Sachs closed out a difficult 2023 after profits fell by nearly a third from the prior year, and it stemmed from a slump in investment banking deals and earlier write offs surrounding its Marcus consumer banking franchise, which resulted in some high profile departures from the firm. There was even a point where there were whispers that the CEO, David Solomon, was on his way out, but those rumors have since cooled as he approaches 6 years in the top spot. So first, pivoting away from its consumer business, Goldman Sachs eventually decided to nix it entirely. It was an expensive endeavor that saw record billions of dollars in losses and abandoned other mass market products like financial planning unit, online lending service, Green Sky, and its partnership with the Apple Card. That led many to question about the leadership as well as effective collaboration and communication with the organization. So the stock itself, right? Google's been getting nuked. The stock itself has been doing pretty well. Realistically, we're trading into all-time highs with barely any real significant pullbacks. The last pullback that we have seen, this is a weekly chart actually. So the last significant pullback that we've seen this year was that early August drop, right, where we've rebounded very significantly since then, but it's still coasting pretty strong for the majority of the year. Things at the bank now seem to have stabilized after doing too much too quickly, and Goldman's core global banking and markets, or GBM division, has topped the market share of its rivals. While the bank has seen strong growth within its assets and wealth management unit, that appears to have kept Solomon, who is known for his brash attitude at the top, with stocks advancing 130% since he took over in October 2018. So we'll see how that kind of transpires. A lot of the banks are actually warning right now of potential declines in these markets. You'll notice that they change their ratings and expectations for the SPX by the year end a lot, right? When we see a drop, they revise it lower, they revise it higher. Many revisions galore. But the more they revise it higher as we enter this like current market condition, I think that they're kind of preparing to dump their bag in the coming months before we start to see the effects of that Fed pivot. In terms of other news, what we have is Apple. Apple yesterday talked about its new products, unveiled new products on Monday, its highly anticipated Glow Time event. But it did fairly little to excite investors as shares ended the day a little unchanged here. There's a lot of discussion. Analysts have been discussing whether the September event supercharged Apple's platform strategy or if it's a lacking growth catalyst. We saw that the new iPhone 16 is designed for AI from the ground up and marks the beginning of a new exciting era. Apparently, that's what Tim Cook declared. Overnight, Apple also lost an EU court battle in a long-standing 13 billion euro Irish tax case. So we're gapping a little lower right now from yesterday on Apple, but it didn't really do much yesterday to pop too aggressively. Yeah, okay, we destroyed all the losses that were created intraday, but right now it's pulling lower with a intermediate lower high after that August bounce. So tech in general is a little sleepier right now. We just saw Google, right? It was on my screen at the beginning. Google's been getting tormented. It's below its 200-day average. It's one of the weaker tech names right now. Nvidia is weak as well, but Google has dropped below its August low significantly as other large tech names are struggling to kind of hold that balance. And we're not going to see the markets rally significantly, potentially make a new all-time high into the end of the year until tech gets its act together. SMH is another big factor where we've seen significant declines in semiconductors, which is pulling away from the strength of the overall market. So in terms of some other news, right, supply shifts, Taiwan's exports rose to a new record of $43.6 billion in August as artificial intelligence boom continues to fuel demand for the semiconductor equipment. Exports to the U.S. surged to about 79% to an all-time high of $11.9 billion, surpassing the previous record of shipments to Taiwan's largest trading partner, China, and underscoring the major shift in Asian supply chains. Taiwan's finance minister expects total exports to steadily advance in the second half of the year, helped by peak export season and continued AI-related demand. And as we've seen, right, the AI kind of narrative is slowly kind of diminishing until we start to see better results and these individual names and companies start actually providing a path, a more defined path and more results to this. So it can't just be AI mentioned 1,000 times during an earnings call and this thing goes up. It looks like the market's grown a little smarter to that, and Nvidia's pulling down right now. It might have seen some kind of temporary low before we get a next pull down, but big tech is still lagging very, very behind. So what we also have, the debate stage, right? The first presidential debate is going to be tonight, where Kamala Harris and Donald Trump are set to face off. Pretty high stakes, which could dictate which candidate can secure a lead in a tight contest right now. I'm not American. Don't come at me with any political stuff. I don't know, right? I'm just a gentle idiot observer from the sidelines. So it's going to be interesting. We'll see what happens throughout it, right? Who looks like a more attractive candidate based on how they perform can take center stage throughout tonight and tomorrow pre-market. We could see some kind of indication of what's going on. So we'll take a look at that, right? Economic plans are going to be one of the biggest things that are going to be talked about as well throughout this. And, right, we could see some kind of movement in the markets in the after hours trading session based on some of this. So today we don't necessarily have too much news. A lot of eyes are going to be on pre-market tomorrow. CPI data. CPI inflation data is going to be the number one thing this week that a lot of people are peeling their eyes for. I think it's expected to be a softer print, which helps us rally into that first Fed cut. We'll see how that transpires, but I expect kind of like more ranging, slower market movement throughout the day leading into that, especially as we get closer to the afternoon session. I don't expect too much movement unless we see like the CPI leak right at the close, where markets and big volume and movement can take center stage. So that's going to be interesting to watch. But right now, I'm going to be waiting fairly eagerly for that CPI print to come out and see how markets trade at the close. What we've got so far on the S&P 500 is we're trying to enter into a balance to the upside. Overnight, we were talking about this last night, where the overnight buy area was 54, 63, 65 on the S&P. We're up about 30 handles from that area, and we've accepted into this auction. Right now, I do think pullbacks are pretty attractive into 80, back into that like 75 area on the S&P, and I want to see if they can continue this momentum as we look to target 55.05 to 55.10, where I think if there's going to be any kind of sell pressure, they're going to try and snip it out from there, just like a little pullback, or maybe that starts a larger cataclysmic move down before we start entering into yet another auction even higher. So those are my views for the market today. I'm leaning a little more bullish if we can actually pull back. Right now, I'm going to be an observer of this market to see if maybe we just open and this thing just skyrockets to the upside. That's fine with me, but I'd like to see pullbacks get bought into rather than anything too aggressive trying to buy these highs is what I'm trying to say, right? There's a lot of congestion of buy side into this high right now, so I think that can start the little pullback where I'd look to start buying into some dips. So that's all I got today. Happy trading. We'll be streaming this week at the end of the week. I'm a little sick, so ideally we get back to 100% by then. But check out tradeproacademy.com. You can get our blueprint PDF for my futures trading strategy there. A lot has gone into that. It's around 85 pages, and it's not even complete. So you can go get that at tradeproacademy.com, and I'll see you guys in our trading room. Let's open that up and see what's cooking for today. So thank you, everyone. Take care, and we'll chat tomorrow.